In November of 2021, I told my community Bitcoin was topping out. A few weeks later, we started crashing and we didn't stop until we hit 17K. It went a little lower than that, but I called the bottom at 17K. Then in late 2022, I told them that the bottom was in. Everyone thought I was crazy. Bitcoin went from 17K to over 100K in the next few years. Both calls came from the same three tools. Not opinions, not vibes, not some guy yelling on Twitter. Three specific tools I've been using for almost a decade. And those same tools are flashing again right now. This video is exactly what I called on the last bottom, what those same tools are saying today and when I'm buying this one. Before I show you what's happening right now in the charts, let me walk you through some of the tools that I used to call the Bitcoin bottom at 17.5 last time, because once you see these work together, you'll never look at crypto charts the same way. Guys, it's really simple. Now, we did walk through this. Let me just throw this up here. This is the Bitcoin rainbow chart right here. You can just search Bitcoin rainbow chart. This chart is very simple. This is not what you're going to base all your decisions on, but it gives you an indication of where we are in the grand scheme of things on the overall market. The purple zone down here is basically a fire sale, and it's the buy zone. And once we get up in the yellow, orange, and reds, that is a sell. Seriously sell. FOMO intensifies. Maximum bubble territory. If all you did was have this chart in the past and you saw this, you would know when to get in, when to get out. Close. You would know closely when to get in, when to get out. But we use other indicators, so that's what I'm going to go over with you right now. Right here, we do have the Bitcoin chart up right now. This is what we call the Gaussian channel. Now, I did go over this briefly on a previous video, but I'm going to just share it with you right now. All you do is you go to the indicators and you type Gaussian channel. Okay, that is the Gaussian channel. And then it's going to come up on here. You just leave it on defaults. This is it right here. It looks like the green fog coming in and out. The reason why the Gaussian channel is significant is because whenever we're above the Gaussian channel, we are in a bull market. As you can see back here, as you can see from the previous bull market. Whenever we wick our toe into the Gaussian channel, which happens when we've reached the all-time high and we start to come down and people aren't sure whether the bull market is over yet or not, we usually wick our toe down. We have a nice wick into the Gaussian channel. We touch the top of the Gaussian channel and we bounce. But then we get sucked into it. It's kind of like quicksand. And then we hit the middle line. And as soon as we come below the middle line, guys, that's not good. The Gaussian channel sucks us in and then we hit the bottom. And then as you can see, we wick up and retest the middle line. But as soon as the Gaussian channel turns red on the weekly time frame, we have one final drop to the bottom. That's the 1 year mark. It takes 1 year from the bull market top to the bear market bottom. And then we come back through the Gaussian channel. And once we get above it and retest, it turns green. That is the beginning of the next bull market. And then once we get 3 years up, we come down and wick down to the Gaussian channel. Boom, we hit it again. We bounce. We get sucked down into the center line. We get trapped under the center line. Uh-oh, the Gaussian channel turns red. Boom, one last drop to the bottom. And as you can see, right where this red line is, exactly 365 days from the previous all-time high. That was the bottom. We start to climb out. After the 1 year is up, we start to climb out. We get above the Gaussian channel. We hold, we retest. This wick right here that went all the way through was an anomaly. That was the COVID crash. That shouldn't happen, right? COVID was a weird thing that happened in our lives, but we came right back out. We were technically in a bull market and we rode it up above the Gaussian channel all the way up to the bull market top of 65K. We came down and tested the Gaussian channel. We bounced and then we bounced again and we double topped at 68K, creating the all-time high for the last bull market. This is called the double top. The reason why is because even though it wicked a little higher, it never held above this line right there. So then we come down, we hit the Gaussian channel, we get sucked down to the center line, we get underneath the center line, we're retesting. We drop underneath the entire Gaussian channel and we are in what's called a giant drop level bear flag right here. And then boom, Gaussian channel turns red, one more drop to the bottom. This whole zone was the bottom. And then it went sideways for about a year. This was the 1 year mark. And then we go into a bull market. We get above the Gaussian channel, 1 year all the way up to the top. Again, we stay above the Gaussian channel. And once we wick into the Gaussian channel, guys, we get sucked down to the bottom. We retest the center line. That's second drop level. And then right here, the Gaussian channel turned red. And what happens when the Gaussian channel turns red? On the weekly, we have one more drop to go. We haven't had that drop yet, guys, but I'm anticipating it's going to happen anytime now. It can happen anytime between the time of this recording, which is around April 20th, to the time first 2 weeks of May. So we're looking at within the next 30 days, anytime between now and the middle of May, we are going to have this drop. And then that's it. We're going to bounce and we're going to go up and down until we break through the 1 year mark. The Gaussian channel is going to look like this. It's going to come around like this. It's going to come all the way down. Boom, 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 boom. We're going to go back through it right here, and we're going to bounce on top of it, and that will be the bull market for the next 3 years. Now, these tools tell you when, but they don't tell you what to buy or how much of each to put in, because even if you nail the timing, if you put everything into the wrong coin, you're still going to get left behind. So inside the Crypto Renegades, I share my exact allocations, my entries, and I'm on live calls every week walking you through these same tools in real time. The link is in the description. Either register for our upcoming masterclass or book a call, and we'll get on with you and explain how we do this. Now let's get right back to it. I'm going to show you one more thing, guys, which is very important. I'm going to get rid of the Gaussian channel, and we're going to show you another indicator that is very important in a bear market, and that is the 200-day and the 300-day moving average. Most people do not look at this. They do not understand this, but I have it right here on my chart right here. Boom, that's the 200-day, and boom, that's the 300-day. And then I'm going to show you that on the weekly time frame. This is important because so far throughout the history of bear market cycles, we never go into a bull market until we at least wick through and touch both the 200-day and the 300-day moving average. So let's go back. This is the bear market in 2014. Coming into 2015, we wick right through the 200-day moving average. We bounce on it, wick right through it all the way to the 300-day moving average. That was it. That was the bottom. That was the beginning of the next run up. And then in this bear market in 2018, we come down, boom, all the way to the 200-day moving average. We bounce on it, we start to climb, and then one more wick down through the 200-day and the 300-day moving average touch. And then in the last bull market in 2021 going into 2022, we come all the way down and we wick through the 200-day moving average. We come close to the 300-day, and then right here, boom, we go right through the 300-day, and that was it. We come up and retest the 200, bounce on it, and we climb out. So far throughout history, Bitcoin has never went into a bull market from a bear market bottom without touching the 200-day and the 300-day moving average. You can just see that line. If I go like this, you can see it all the way back. That's the bottom, guys. Where are we right now? Let's just zoom in and see. This is the current downward trending bear market structure. I'm going to get rid of some of these lines right here so you can clearly see where we are in the grand scheme of things. And I believe that you can see these two lines right now coming right into this circle that I got, right? I'm going to move the circle just so you can see it better, but let me just grab it and move it. We have this upward trend line right here. I'll show you what that is in a second. And we have the 200-day and the 300-day moving average coming right into the view, right into the downward trending channel right now as we speak. And what does that mean? That means we're probably going to have one more wick down to the 200 and maybe to the 300-day, somewhere in this zone. It's going to be in this zone, guys. This is going to just go sideways like this, and this is going to come down and touch and then wick down, and then that's it. That's how it works. And you could say, oh, these things don't work all the time. Yes, guys, what I'm showing you is the 200-day and the 300-day moving average on the weekly time zone has never not been hit in a bear market. The Gaussian channel has always turned red right before the final drop. Always. It's not sometimes, it's not 50% of the time or 80% of the time. It's every time. The triple death cross, which is the one last thing I'm going to show you on the 2-day time frame. Let's just go to the 2-day. This is another indicator I use. I'm going to get rid of everything else. I'm going to try to get rid of everything else here. I know I've drawn all over the charts. I'm going to put that on right now and show you what it looks like when we have a death cross on. So let me just click right here, golden death cross. Boom, there it is. And I'm going to go to the 3-day time frame. I meant to say 3-day, not 2-day. This is called the triple death cross. It's called the triple death cross because it's on the 3-day time frame. And every single time throughout history, whenever we have a cross of the golden death cross on the 3-day time frame, we have one more drop. I can show you that throughout history. Here it is. The cross happens right there. When the cross happened, we already had this drop. The cross happened after this drop, and then we had one more drop. Right back here in the bull market before that, cross happens, boom, final drop. One before that, cross happens right here, boom, one more drop after that. So there has not been a time that we had a 3-day death cross where we didn't have one more final drop. And that final drop, guys, indicates the bottom. So this is important. This is why I have this circle right here, because I believe that somewhere in this zone is the bottom. And I believe we got one more drop coming, and that's going to indicate the bottom. That's what we're going to be loading up in our group. And we're going to be getting ready for the next bull market cycle with leverage, safely, using proper risk management. Let's talk about what I'm actually doing with this information, because seeing a signal is one thing, but having a plan to act on it is another thing, guys. You're not trying to catch the exact bottom. I know that we're going to have one more drop. At least I'm 90% confident, because it has happened every other time, based on these indicators I just showed you. And so there's no reason for me to believe it won't this time. So what I'm going to do is I'm not going to try to time the exact bottom, but what I'm going to do is indicate that when we do do have that one more drop, I'm going to just call whatever that drops to the bottom. Now, could it go lower after that? Let me just show you what could happen. It could drop down and then bounce and have a nice up level like it did here, drop up level. And then it could double bottom right here and then bounce and then go all the way to the other side and then maybe wick even down further before going out. So we could have a little bit lower than here, but I'm going to go long here on that last drop because that is always the bottom zone. So it doesn't matter to me if I go long at 55 or go long at 51. It doesn't matter in the grand scheme of things because I'm expecting a 5 to 7x bull market, just like it has done historically, at least 5 to 7x or more. But in this one, a 5x from 50K will bring us up to $300,000. I'm anticipating between 300 and 500,000 for the next bull market cycle. And I'm going to be long with probably at least 2 Bitcoin. Now, you can go long with any amount you want. It could be $1,000 or $5,000 or a whole Bitcoin or more. But let me just show you really quickly what would happen depending, no matter what amount of money you have. I'm going to take a price range and let's just say Bitcoin comes right to here, 50K, right there, 50K. And then we go into the next bull market cycle and we run up, like I said, up to 300K. Let's just go somewhere between 300K and 400K. I mean, 300K and 500K. We'll do it right to 400K. That is a 687% move to the upside. You can see right there, 687%. So what does that mean? That means that if you can see my calculator here, if I have a whole Bitcoin, 50K, and I go long at 50K with a whole Bitcoin and it goes up 687%, 50,000 times 687%, that is a 6.8% move to the upside. That's $343,000 that I turned my one Bitcoin into. But wait, there's more because that's with no leverage. That's just if I had $50,000 of Bitcoin. That's the new value. But I'm going to go long down here at 20x leverage at least. So that's 343,000 times 20. So I will make $6.87 million starting with $50,000, which would be equal to one Bitcoin if Bitcoin dropped to $50,000. So what does that mean? That means you take the $6,870,000 and divide it by 400,000, which is the Bitcoin, which is the price of a Bitcoin, and that is a 17x. That means I'm turning one Bitcoin into 17 Bitcoins, and the value will be 400,000 each. So why in the world would you hodl? Why in the world would you just buy a Bitcoin and hold it for dear life, hoping that Bitcoin's going to go up? It is going to go up, but if you're going to hold it forever, it's just going to go up and down. We have bull and bear market cycles. So what I'm doing, rather than riding these roller coasters up and down for the next decade, is I'm maximizing the gain on each cycle. So not only can I make 17 Bitcoin on the way up, let's just say that this is the top at 300K in the next bull market cycle in 2029, because it takes 3 years to get up there. And then we short it on the way down. And let's say it comes all the way down to 126K right here, previous all-time highs. Well, what am I going to do? I'm personally going to short that with probably 3 or 4 Bitcoin. So let's just say I go short at 400,000 and I write it down to 126K. We're doing the math here. I'm going to get a new drawing just to show you. I'm going to go get a price range right here, and I'm going to start right here at 400,000, and I'm going to short right down to 126K. Now, it could go lower than that in the next bear market after this, but let's say it only goes down to previous all-time highs. That is a 68% move to the downside. Once again, guys, I would be going short, rather, with one Bitcoin, let's just say. But I'd probably go short with 2 or 3 or 5 at this point because I made $6 million on the last one. But let's just say I go short with 5 Bitcoin, okay? 5 Bitcoin at 400,000, that's 5 times $400,000. That's 2 million. That's a lot to go short with, right? But I'm pretty confident because I know that the bull market and bear market cycles are 3 years up and 2 years down. So I'm going to go short with $2 million of Bitcoin, and Bitcoin's going to go down 68% in value. So technically speaking, my $2 million in Bitcoin is going to lose about 32% of value. Is that smart from me? Well, here's how I counter that. So I go short, Bitcoin goes down 68%. That's 2 million times 68%. I just made $1.36 million worth of more Bitcoin on this short because I did it with leverage. Now, that's without leverage. So let's just say I'm conservative and I go short with, I don't know, 10x leverage this time. I just made $13 million of the Bitcoin on the way down. The new value of Bitcoin is 126,000 each. So you take 13.6 million divided by $126,000 per Bitcoin. And that is I am now holding 107 Bitcoins. And that's just from the 2 million I peeled off of the other 6 million I made on the way up, which means that I have more Bitcoin. I have like, I don't know, 13 more Bitcoin because I'll use 5 of them on this short. So add that to this and I'm pretty much up 120 Bitcoin. And remember, I started with 1 Bitcoin at this bear market bottom. The bottom of the cycle isn't a guess, it's a signal. And if you use these 3 tools together, you'll see it before 95% of the market does. And I've done it twice now, once at the top, once at the bottom, and I'm telling you exactly what I'm watching right now. But knowing the signal is only half of this. Knowing what to actually buy, how much of each, and how to structure it, that's the other half. Inside Crypto Renegades, I break it all down, my exact portfolio, my entries, my live calls are every week. The link is in the description, and I'll see you there.